Welcome to the Improved Credit and Finance Show. This is Wanda Strickfaden, owner of Improved Credit here in the Carolinas. We're going to talk today about FICO 10. What's FICO 10? Well, Fair Isaac Corporation is an organization where they created a scoring system. It's actually been in the system. We've been using that system for decades. Now, FICO 8 was the system we've been using for a while now. I've actually been in the business of helping people fix their credit now for the last 20 years. And within my 20-year career, I've noticed FICO 8 has been implemented within my career. They say that the system changes every 7 years, but I haven't noticed a change. So until recently, when COVID happened, I noticed there were changes taking place. And it actually began before Christmas. I started seeing things happening with the scoring system, and I wasn't sure what was happening. The first thing I started noticing is that some banks discontinued allowing customers to apply for a secured credit card. That started happening right before Christmas. And I thought, that's strange. Why is that happening? We must be going through an economic change, but neither one of us, no one knew what was happening yet. January of 2020 comes around, and I notice when customers are paying off their payments on their credit cards at zero balances, that their scores began to drop instead of improve, which the opposite happened for a very, very long time. And I noticed when customers borrowed less than 30% of their credit limit, their scores were dropping as well. And I thought, what's going on here? So what I ended up doing is I did some research tests with my customers that are within my credit repair program and my monthly monitoring service, where I monitor their credit report and their scores for their active accounts to make sure their scores keep improving. So not only am I fixing their credit, but I'm also monitoring it at the same time. What I've noticed is that if you have an active revolving account, an active credit card, and let's say your credit limit is $1,000, you never want to keep that balance below 50% of the limit. It has to be either between 40 to 50% of the limit, but nothing less than that. Honestly, because what I've noticed is that when customers pay off their balances, their scores decrease, which is shocking. For me to tell you as a credit expert, you actually need to borrow from your credit cards at 50% in order for your scores to improve. Now, obviously, there is a strategy to this. You're not going to borrow at 50% for something that you can't afford to pay back. Definitely use it for an everyday expense, like a car payment, a utility bill, a cell phone bill, a subscription with Hulu, Netflix, Amazon Prime, gym membership, whatever you have going on if your gyms are open right now. And make sure that you're able to pay it off at some point because you have it within your cash flow to pay it off. So if you're using your own paychecks or cash flow to pay your everyday payments, use your credit card instead to pay those accounts, but keep the money that you would normally pay with your own cash in savings to pay it off later. Okay, there is a strategy to this. So you have to make sure that there's an active balance with your revolving debt, that your balances are at 50% of your credit limit. And yes, there may be times where you can pay it down to 25%, or you can pay it down to 30%. Never pay it off completely though. Keep a balance on there. But do it that way, and every month change it up. And then go back to 50% of the credit limit. Of course, don't go into debt. That's not the goal here. The goal is to make sure your scores do not decrease, that they continue to improve. With FICO 10, that's a major factor, is making sure that your balances are at 50% of your credit limit. Now, you probably, like most of us, have more than one credit card with limits that are above $1,000 maybe. And you don't want to go into debt, okay? Let's try not to do that, but just try to be strategic with what you're doing. Maybe one card, you're borrowing up to 50% with an everyday expense, and the rest you're just leaving it alone for a while, and then you go back to paying that one off, and then using another card at 50% for an everyday expense, and then, within the next 2 months paying that off, so just be strategic with what you're doing. The other biggest factor, which was also a factor with FICO 8, that is a factor with FICO 10, is payment history, making sure you pay your bills on time, never being delinquent. Now, I would notice a credit score decrease anywhere from as little as 1 point and as high as 20 points per month per bureau when a consumer was delinquent on an active credit card installment loan or mortgage. 1 to 20 points within that month. Now, I've seen a decrease up to 100 points because of one delinquency. That's drastic. So obviously the scoring system is there to benefit you because of COVID, allowing you to borrow more because of the pandemic and our financial crisis that we're experiencing right now, but they want you to pay them back. They don't want you to not pay them back. So they're penalizing you if you are delinquent. Now, that doesn't include forbearances. We're not talking about your student loan forbearances or a skip a pay option that you have with your credit card accounts, installment loans. We're not talking about that because that's not reporting delinquent. It shouldn't be, at least. So if you've enrolled in any of those options between May and the end of summer, obviously that should not be reporting that you're delinquent. Just know that. But if you have a 30-day delinquency on your credit report and it was your fault, keep in mind there is a way to rebuild, but it's going to take time. And I'll be honest with you, it can take up to 6 months to a year before you see improvement of up to what you've lost. So if you've experienced recently a 50 to 100 point decrease, that's going to take a good year to see. I guarantee it's not going to be overnight. Maybe, if you do it in a very strategic way, or especially with our services helping you through that, we may be able to experience that sooner rather than later. But, it's going to be tough. There is a way to improve your credit though. And I know that we're all going through this financial hardship. We're basically in fight and flight mode. We're not sure exactly where we're going to be in the next 6 months to a year financially, but just know there is a light to the end of this tunnel. There is a way to get your credit back on track, and there is a way to get out of debt if you are overwhelmed with credit card, installment debt, student loan debt, mortgages, tax liens, judgments, whatever you may have. We handle that all. So for a consultation, give us a call at 704-877-8739 and visit our website, www.improvecreditllc.com. That's improve, IMPROVE, credit, CREDIT, LLC.com. Thank you for listening today.